Welcome back at 7:45. Stocks soared earlier this week on news that President Donald Trump may ease his hardline position on tariffs. Treasury Secretary Scott Bessent told investors he expected a de-escalation of the China-U.S. trade war in the near future, but investors still may be worried about uncertainty and price increases. Financial advisor Ernie Burns of Burns Financial joins us this morning to discuss what has been happening as of late, and most importantly, the impacts that these tariffs could potentially have long-term and short-term. So let's talk about this, Ernie. Good morning. Thanks for being with us on this Friday. So the president's plan includes 10% tariffs on all imports, plus 25% on vehicles and auto parts. And of course, there's a back and forth on what's going to happen on our end with Chinese imports and on China's end with our products being imported there. But let's talk about some longer-term impacts for now that folks can expect.
Longer term, well, short term, don't do anything. Okay. There's no reaction right now because that 90-day pause is a huge plus, and in negotiations with several countries right now. Indonesia, Vietnam, and the European the EU, they're all in negotiations right now, which is a win-win. Long term, different story. If this plays out past July, then you're going to start seeing the real effects of these tariffs. Right now, they're not even in effect. That's why you see the markets jumping so quickly or going down so quickly on any little bit of news that comes out of Washington.
Why July? What's so specific about that point in the year?
That's when
things get a little dicey.
That 90-day will be over with.
Okay.
In addition to all that's going to come to fruition, in the sense of all these tariffs will go in effect, and now the markets started to adjust, thinking that this is going to get worked out. However, I don't think that's going to occur. I've been telling my clients that too. I think June, July, by that time period, the market just wants to know a level playing field. Who's going to be taxed, who's not going to be taxed. They're not even actually really worried about how much the taxes are to a certain degree, just the playing field. Once the market knows the playing field, then you're going to see the market surge. Because Fortune 500 companies right now are reporting earnings, and they're hitting earnings. And since they're hitting earnings, they're not concerned right now, but they are concerned about the next 90 days.
Let's shift gears a little bit. How should viewers, if at all, be investing their money? You mentioned kind of don't make too many quick adjustments or moves, but should investing be happening right now?
If you're a trader, what I mean by traders, if you're a daily trader, you're making money right now, or you're losing big. It's how you're trading. However, if you're a short term, in other words, you're retiring in the next couple of years, don't do anything right now. Wait for the market to come back, and it will this year, okay? And when that does come, pull back the risk. If you're not retiring for, say, 4 to 5 years or 10 or 20 years, this is the time to buy our stocks on sale. And I've been saying that since January. This is the time to buy stocks on sale. Right now, you have the opportunity to buy stocks at a discount. Your 401k, keep contributing to it, add a little extra if you can, because you're buying them at a discount.
All right, Ernie Burns, thanks so much for helping us navigate this. As you mentioned, things should level out later on this year. Right now, things are up and down, so don't make any rash decisions.
No, next 2 months is very important.
All right, Ernie Burns, thanks so much for your time. Have a great weekend.
Thank you.
All right.